Hey there, my fellow money nerds and financial enthusiasts. Today, I'm going to give you the lowdown on the Fed interest rates for 2023. The Fed has been keeping interest rates low to help stimulate the economy during the pandemic, but they've hinted at raising rates in 2023. What does this mean for you? Well, if you're someone who likes to hoard their cash like a dragon hoards gold, higher rates might mean higher returns on savings accounts. But if you're looking to take out a loan, be prepared for higher monthly payments. First things first, let's talk about what the Fed interest rate is. Essentially, the Federal Reserve sets a benchmark interest rate that affects how much it costs for banks to borrow money from the Fed. When the Fed raises the interest rate, banks have to pay more to borrow money, and that can trickle down to affect the interest rates on things like loans and mortgages for consumers. So what does this mean for this year, 2023? Well, the Fed has been hinting that they might start raising interest rates in 2023, which is causing a bit of a stir in the financial world. Some people are excited about the prospect of higher interest rates, while others are a bit nervous about what that might mean for the economy as a whole. Personally, I think the Fed raising interest rates in 2023 is a good thing. Sure, it might make borrowing money a bit more expensive, but it also signals that the economy is doing well enough to handle it. Think of it like a teenager getting their first job and having to start paying for their own phone bill. It's a bit of a shock to the system at first, but it's a sign of growing up and taking on more responsibility. Plus, higher interest rates can be a good thing for savers. If you've got money sitting in a savings account, a higher interest rate means you'll earn more money in interest. And let's face it, with the way inflation has been lately, we could all use a little extra cash. Of course, there are always potential downsides to the Fed raising interest rates. Some people worry that it could lead to a slowdown in the housing market, since higher interest rates can make mortgages more expensive. And if the housing market slows down, that could have a ripple effect on the economy as a whole. There's always a chance that things could go wrong and the economy could take a hit. But at the same time, I think it's important to remember that the Fed has a lot of tools at its disposal to help mitigate any negative effects. The Fed is pretty good at what they do. They've got a team of experts who are constantly analyzing the economy and making decisions based on what's best for the country as a whole. So while there may be some bumps in the road as interest rates start to rise, I have faith that the Fed will be able to navigate them and keep things on track. One thing that I find amusing about the whole Fed interest rate conversation is how it seems to turn everyone into armchair economists. Suddenly, everyone has an opinion on whether the Fed should raise interest rates or keep them low. It's like we've all become experts on monetary policy overnight. But hey, that's the beauty of living in a democracy, right? We all get to have our say, even if we don't necessarily know what we're talking about. And who knows, maybe one of us will come up with a brilliant idea that the Fed hasn't thought of yet. The Fed raising interest rates in 2023 is something to keep an eye on, but I don't think we need to panic just yet. It's a sign that the economy is doing well, and it could even be good news for savers. Plus, it gives us all something to debate at the dinner table. So let's raise a glass to the Fed and their interest rates. May they keep us on the path to financial stability and keep us all on our toes. What do you think about this topic? Share your thoughts in the comments section below. Don't forget to like, share, and subscribe to this channel. I'll see you in the next video.